The Fed's narrative of inflation is transitory is literally crumbling, and the Federal Reserve is in full panic mode, and officials are now calling for an emergency meeting and emergency rate hikes. And after the latest CPI data, the markets weren't doing that bad, but as soon as the Fed announced this, the market started shaking in their boots and started selling off immediately. So in today's video, we're going to go over the latest statement by the Federal Reserve about what they're really going to have to do to fight inflation. None of this 2-3% interest rates, people. They're going to have to do much more. And then I'm going to go over all the action that happened in the markets today, because people, there's definitely something very strange going on. Okay, people, you know how we roll around here. Let's not waste any time. Let's get straight into it. Well, holy smokes, everyone. Look at this. Fullard backs supersized rate hikes and sees a full 1% increase by July 1. This is exactly what we've been discussing on the channel, everyone. I've been saying that they're going to have to announce more and more rate hikes as the months go on. Remember in December when they were saying, don't worry, it will just be 3 rate hikes? Well, it seems like every month they're announcing another and then another rate hike. Because people, just like I didn't believe when the Federal Reserve said inflation was transitory, and why you can't believe a word the Federal Reserve says, don't believe them when they say they're only going to lift interest rates to 2%. If they're really serious about bringing inflation down, they're going to have to jack interest rates up to minimum 5%. So listen to this. This will be the first half-point rate hike since 2000 in response to the hottest inflation in 4 decades. And this is why I've been wrong and looked like a fool for the past 6 months, because the Federal Reserve is continuing to be behind the curve, and they should have done this 6 months ago. Listen to this. This is huge, everyone. There was a time when the committee would have reacted to something like this by having a meeting right now and doing a 25 basis point rate hike right now. I think we should be nimble and consider that kind of thing. This is huge, everyone, and this is what's really spooking the markets right now. Fed Bullard is calling, saying, what are we waiting for, everyone? It is already out of control. We need to have an emergency meeting right now and start fighting this inflation right now before this fire burns down the whole forest. And some people saying this is all shock and awe, but this is his response. I do not think this is shock and awe. Markets are already pricing in significant moves. I think it is a sensible response to a surprise inflationary shock that we got during 2021 that we did not expect. Well, I don't think you have to be an economist to know that if you increase the money supply by 40%, you're going to get some kind of inflation. But he's completely right here. This is a sensible thing to do. Call an emergency meeting like what they do every time there's a crash. Okay, we can always call emergency meetings when the markets are crashing, but when the markets are in the red and inflation is high, they don't want to pop the bubble, so no emergency meeting when they need to lift interest rates. But of course, yes, when we need to drop interest rates, we'll have an emergency meeting anytime we want. But it wasn't just what he said about rate hikes, he also has a warning what they need to do now with the Federal Reserve's $9 trillion balance sheet that is absolutely spooking the bonds market right now. He's talking here about the Federal Reserve asset purchases of $120 billion per month. He says here, as a general principle, I see no reason why you can't remove accommodation just as fast as you added accommodation. AKA, why can't you reduce it at $120 billion a month when you're adding $120 billion? Especially in an environment where you have the highest inflation in 40 years. But there's a second part to this. The second part might involve asset sales, he said. I would very much like the committee to consider that as a possibility. So we can do that if we need to, because inflation is not decelerating as we hoped. Wow, everyone. So he's saying we need to have an emergency meeting and start lifting interest rates now. We need to do the first rate hike by 0.5 percentage point, not just 0.25 percentage points. That will do nothing. And he's saying we need to start selling bonds at $120 billion per month. And he also said we need to do asset sales. And I completely agree with him. They do need to do this. But the question is, can he get the rest of the Federal Reserve to agree? But people, we need to have a look to see how the markets reacted to this news today, because things are definitely looking strange. Okay, so first things first, gold and silver, they didn't react much. They were just down 0.5%. But we need to talk about this, everyone. The 10-year US Treasury yield, it actually hit 2.06%. rising by 1.3 basis points. That was absolutely massive. And what this means is you're going to start to see mortgage rates absolutely skyrocket. Not to mention credit cards and car loans and personal loans as well. But what was very strange here that I saw, everyone, on the announcement, the DXY, the US dollar index, absolutely spiked and skyrocketed, but then you could see it dumped shortly after. And now it's somewhat recovered, but you can see here this spike and dump is very strange. But I know what probably most of you are wondering, what happened in the stock market today and what happened with Bitcoin. So look at this, the Dow Jones was looking like it was going to recover in the green, but it did fall 1.5% today, down around 500 points. The S&P 500 had a worse performance, down 1.8%, and the Nasdaq performed even worse, down 2.1%. But I have to admit, what I am surprised with, Bitcoin and cryptocurrencies are holding up much stronger than I expected. And I think this is because of all the companies buying up Bitcoin and other altcoins coming up to the Super Bowl, because they're spending millions and millions of dollars on ads. So they're definitely going to want prices to be high, so then people sign up to their platforms, because if the prices are crashing and have spent millions of dollars on advertising, not many people are going to want to sign up. So everyone, what you're probably wanting to know is, okay, what does all this mean in simple terms? What this means is everything is playing out exactly as I expected. Inflation is getting worse, the Federal Reserve is starting to panic, interest rates are going to go up, and the markets are going to crash. Now, of course, along the road, there'll be a lot of volatility. It won't be a straight decline to the bottom. So who knows, the market could rebound tomorrow. But the overall trend here, I think, is we're going lower. Because remember, they're going to bring interest rates to 2% anyways. They're going to stop QE anyways. This is what they do when they normalize policy. So if you believe the Fed and think they're going to stop at 2 or 3% interest rates, I don't think so, everyone. I think they're going to have to go much higher. But everyone, that was just a quick emergency update on what the Federal Reserve announced, some reasons why the market fell today. But what do you think? Let me know. Now, for my loyal viewers and subscribers still watching, you're awesome. If you're interested, get up to 5 free stocks with Moomoo, link in the description. Thanks for watching. I'll see you all in the next video.